if I look at the face of the balance sheet, I need you to get comfortable with this, right? So I'm going to work through the balance sheet face and tell you where to get what information. Is that what you want?
Yes, ma'am.
Okay. So now if I look at fixed assets, that fixed assets is the carry value, the end of the year. And most of the times in grade 12, they will not ask you to calculate it in the face. That's a waste of testing note 3. They will actually either give you note 3 to do and you need to transfer, or they'll put it in here. Okay. You know what I'm talking about when I say carry value end of the year. So if you go through the note, it more starts like all these things available till I'm looking for it. Just pause. If I'm talking about the carry value, the end of the year, it will be this one here. Yeah, this total here. Okay. So in other words, it's the last carry value calculate. So then, financial assets is your fixed deposit. Now your fixed deposit, please remember, you always take your fixed deposit less the amount that's going to mature. Right? The amount that matures goes to cash. So if I look at current assets, please, you have to get the order right. There's no way around not getting the order right. So it has to be inventory, receivables, cash. And you don't have to write those long sentences, cash and cash equivalents, trade and other receivables. You don't have to do that. If you wrote this, then already they'll give you your marks because they just want to see you know what goes where. Okay, so this inventory is literally your stock take. When you do your stock take, you want to see, I want to say stock stake. Stock take, né? Then it's literally your trading stock and consumable stores on hand. That's what it is. The receivables. Now this is your note for receivables that you need to know. Okay? So I'm going to write it nice and big here, that you have it. This will be your debtors control, less provision for bad debts. Okay? So usually then you get your net debtors. Okay? Because you minused. Now unless you don't have to show it if they only ask you the face. But obviously if they ask you the note, you need to know it. Okay. Then comes your accrued income, prepaid expense, and deposits. Now your deposit, let's say on water and electricity, or on a rent expense, anything where you needed to pay a deposit, and once your agreement with that institution or person is done, you get the deposit back. And we call that an asset because I'm going to get that money back. So how it works is if I move into a building, if I'm renting or buying, I'm responsible to pay the water and electricity bill. Then I have to go to the department, the municipality. I have to connect my electricity, I have to connect my water. So I pay at the municipality a deposit. They want that deposit because if I get behind on my accounts, they take the deposit, then I don't get the deposit back. Or if I break something that they need to fix, I won't get it back. But if I now move to another place and I close down that amount, that connection, they give me the money back. Okay. So that's why it's a receivable. Okay. What can also go in here is SARS if it has a debit balance. Now why do I say it can go in here? Because you can choose to put that SARS in here just before cash. as a separate entry. You can do that, or you can put it in the note. Usually it's easier just to put it in the note because this usually counts 2 ticks. It doesn't count that much. But please, once again, if you see that you want to put a very big amount in there, just go back in your steps and go check. Aren't you now maybe putting in the income tax or the interim payments? Because it's the difference between the two. Ne? So I'm going to put it here for you. It's the income tax less the provisional. And if the provisional is more than the tax, it's a receivable. But if the provisional is less than the tax, it's a payable.